Eyes turn to NFP data. Hello and welcome to our weekly outlook. While Mr. Powell didn't offer any clear vision on Federal Reserve policies, in the week ahead, we have to watch the non-farm payrolls numbers to have a better idea of the current employment situation in the United States. On the other hand, in line with the other important economic data, we should not forget about COVID-19 risk as well. Let's take a quick look at the week ahead and the most important events. Number 1, global GDP. The week ahead is the GDP week. In this week, we will have the gross domestic product numbers from Russia, France, Italy, Turkey, Brazil, South Korea, and Swiss. The leading indicator will tell us the global economy is healthy or not. We are generally expecting to see positive data and good improvement in the second quarter final numbers. Even if these data are for the quarter that has passed, however, detailed data and numbers can affect the market sentiment. Number 2, European inflation. About inflation, while it's a concern in many economies, European headline CPI is at 2.2% at the moment. And this is while the interest rate of the European Central Bank well sits at the negative territory. ECB President Christine Lagarde has said a rate would raise once 2% inflation becomes sustainable, so it will take time for ECB to consider about rate raise. German DAX is still expected to increase, and these data also will support it. Number 3, US ISM survey. After weakness in the past 2 months, now we are waiting for another decrease in both ISM services and non-manufacturing PMI numbers. The K service numbers is expected to fall back to 63 in August from 64.1. The service sector is the most important component for the US economy. However, these numbers will publish after the US payroll numbers, so their importance will be affected by employment data. Number 4, global service PMIs. Friday, while we are looking after US NFP numbers, another key data that we have to focus on that is the Service Purchasing Manager Index. Australia, China, Russia, Turkey, Spain, Italy, Swiss, Eurozone, and United Kingdom are the economies that will publish their numbers. Market participants will mostly focus on Eurozone and United Kingdom numbers. Both economies saw weakness in their activities in the past 2 months, especially in manufacturing sector. For the service sector also, now we are waiting to see a weakness, especially in United Kingdom, because they could not get the advantage of their summer holidays because of the latest coronavirus wave and self-isolating. Expected weakness is supposed to weigh on the pound against its crosses. For cable, since the weakness in United States dollar also expected to be seen, we are expecting a natural trend. And finally, number 5, US non-farm payroll. The created dichotomy between FOMC members could even deepen. Even though the official unemployment rate in July fell to 5.4% from 5.9% of the month ago. And for the August also, market expected another decrease to 5.2%. Still, detailed numbers like 7 million employees less than pre-pandemic and lower participant rate, which fell to 61.7% from 63.4% of pre-pandemic, are a bit worrying. 728,000 jobs are expected to be created in August. Beating numbers can increase the chance of tapering earlier in this year, which is not positive for the stock market in the midterm. Thanks for being with us and hope this week will be an amazing week for you.